As we approach the budget 2024, in Asianet's special budget segment, we are exploring its implications for the startup ecosystem and its impact on investment outlook. To discuss all of this, I'm joined by esteemed guest Vinod Keni. He is a prominent venture capitalist with many years of experience in the industry. Currently, he is a partner at 9 Unicorns. Welcome to the show, Vinod. Let me start by asking you, what specific measures do you hope to see in the budget 24-25 that would support the startup ecosystem in India?
Thank you, Hina. Thank you for inviting me to the show, and I look forward to this interaction with you. I think with the budget and now, I think there's a fair amount of expectations, at least from the VC ecosystem or the VC community. As well as some of those that could potentially also impact the startup community as well. I think as a venture capitalist, and especially as somebody who has been seeing this industry evolve over the last decade, I think there are a few expectations, or at least a few asks. I think the first and the foremost on that is one that has also been in the news in recent times, and that's the angel tax, right? It has been a deterrent. It's very subjective. It's sort of something that actually has impeded the development of domestic capital, right? So I think, one would be to see if, this is something that can be abolished, because considering the fact that SEBI regulates private transactions, and private markets, especially under the AIF scheme, is largely regulated by SEBI. I think, abolishing the angel tax will go a long way in attracting a lot more domestic capital. And this has also added a lot more friction, right? Because from the perspective of compliance with this tax, startups actually have a lot more to do. And I think that's another deterrent, or at least friction point for startups. If not, then at least it should be made a little bit more simpler and probably a lot more objective than what it is at this point. So this is one ask. Another ask is the fact that, I think the domestic venture capital industry is sort of at this point starting to develop and grow, but it's still, I think there's a fairly large need for more and more fund managers, and for more and more domestic capital to also play a role in this industry. Largely, so far, if you really look, a lot of the capital that has flown into venture capital in India is all overseas capital, right? Very little domestic capital still participates. A lot of private equity capital is also overseas capital. There, I think, should be more and more impetus given for the development of domestic capital, which also would also include maybe increasing the allocation under the fund of funds scheme that SIDBI currently manages. And I think that should be one area where I would like to see more allocation. Also, I think maybe specific allocations and probably a little bit more of patient capital for more research-oriented and innovation-driven projects, right, which take a longer time because of research and a longer time for commercialization and for them to actually get monetized. And these would be things around, biotech, for example, deep tech, and, some of those that probably take a lot more research and the ability for us to support that research. Because without that kind of research, innovation doesn't get driven. And I think that's another area where I would like to see hope that I can see some more allocations, or maybe even specific allocations within the fund of funds scheme. That I also wanted to sort of also do is, I think it's high time that domestic pension funds are also allowed to invest in AIFs. I know, insurance companies are now allowed to invest in AIFs, but also getting pension funds, I think, is a huge ask. Globally around the world, pension funds are fairly large participants in the private equity and the venture capital industry, and I think it will go a long way in also supporting and bringing more domestic capital in.
If you talk about taxation norms, it's quite complex in venture capital investments. Do you think any potential impact of simplifying taxation norms if it happens in the budget?
I would think so. I think, if there is a simpler, if you actually make it a lot more simpler, for most domestic VC funds, they are pass-through vehicles, right? So we don't necessarily get taxed. But then I think, even for startups in themselves, I think, you want to actually sort of make the tax regime a little bit more streamlined and a little bit more simplified. And I think that is a big ask, right? Because I think you need to make it much more simpler, because most of the focus for startups should be on a product development, customer acquisition, and scaling the business up. Now, if you're actually spending so much time on tax compliance, that takes away a lot of time off the promoters and the management team. So I think a simpler tax regime is definitely an ask, both from the startup perspective as well as from a fund perspective as well.
Also, taking a cue from your earlier answer, you talked about angel tax. We know that there have been consistent calls to remove angel tax for attracting domestic and foreign investments in Indian startups. If given any sort of relaxation in this, what do you think, how it will impact the startup ecosystem? If you can just break it down for our viewers.
So, look, I mean, if you look, less than 3% of capital in India is domestic, right? I mean, most of it is global. We have a very, very small domestic capital base. And if you want to actually increase that, I mean, we are talking about potentially, being able to, absorb or at least have the ability to take in or at least attract at least close to about 400 to 500 fund managers. Now, if you're looking at that level of fund managers, you need a lot more domestic capital. And I think for that domestic capital to come in, either simplification or abolition of the angel tax will go a long way, because the way the current angel tax is and the subjectivity of it actually is a deterrent both for startups, because, the moment the valuation is sort of questioned by income tax and not accepted, there are a lot of implications, right? So from that perspective, I think making it simpler will actually bring in a lot of domestic capital in, a lot of it which is sitting with HNIs and, family offices or even institutions for that matter, which could potentially get sort of brought into either startups as well as to funds.
What sectors, if I talk about sector-specific demands, what sectors do you believe will benefit the most if we talk about the budgetary allocations of the budget 24-25?
So I think a bigger one, in my opinion, is deep tech, right? I think deep tech, in its very nature, needs a lot more time and a lot more capital, especially at the initial stages for research. So deep tech is one area where I think we need a fair amount of support. Biotech, healthcare related research, especially around medical devices, delivery of innovative medicine, especially in underserved markets. A lot of this requires, a lot more research and also a lot more time for monetization and scale. So these need definitely a lot more patient capital. And I think these are areas where I can think of. The other area where I think there is a lot more support needed is climate tech, right? So climate tech, if you take away, EVs and all the other things that have happened within the EVs, beyond that, if you start looking at newer ways of, generating energy storage, also looking at things around water and water management, which is a fairly big challenge across the country. Some of those, and also the ability for us to actually be able to look at, trash and garbage and all of that, right? So I think a lot of those require, innovative ways, a lot of research, and those I think would really benefit from a greater allocation or even support, even at the initial stages.
Right. If you talk about innovation and growth, we must know that for any startup to flourish, innovation and growth must go hand in hand. What do you think, what role should the government play in order to foster innovation as well as ensure that there is a boost in growth as well?
So I think there are, I can think of, a couple of ways, right? One is promote more and more research and research-based, expenditure or investment from corporates, and the ability for them to actually be able to promote that. Now, whether you give them, additional incentives or, what kind of other tax incentives you can provide for actually supporting innovation and more research, at least at the corporate level. Because corporates also have the resources, and they're also the ones that in most cases also know what the customer problems are. The second is, I think we need a lot more support for research that's happening at research institutions that can potentially lead to monetization and commercialization later on. And as well as, like I mentioned earlier, a sort of a greater allocation within the fund of funds, or even within some of the other institutes that provide grants for early research as well as monetization efforts of some of these innovative products and ideas. Unless there is enough capital available for them, a lot of this is not going to happen, right? So if you want to really build this out, we need to essentially make sure that there is support available, at least in the financial sense. And that could be either through venture capital and early stage investors backing them. It could also be grants that could potentially be coming in selectively, as well as supporting through corporate innovation and corporate research.
Vinod, in your closing remarks, I want you to assess the current funding climate for startups, and also what changes would you like to see, like 2 to 3 broad changes you would like to see in order to boost growth for startup sector.
So I think, I think the early stage investments, there is a lot of capital dry powder available, right? There are research reports that talk about at least about 10 to 12 billion that has been committed to venture capital that is available to be invested. And I think you are starting to see that turnaround, right? The last 2 quarters has started seeing a lot more activity and a lot more investments into early stage starting to happen. And I think that trend will continue. I think what has happened is expectations have all changed, right? So what the expectations were 2 or 4 years ago is not the same anymore. And what has also happened is, I think, what I call as momentum capital, or some of this opportunistic capital that was there during that time, especially 2020, 21, 22, that has all gone away. But then, the real solid capital is available. And I think there's a lot of that available, and we'll continue to back them. I think what is really important is that, they want to look for business models that will actually not only scale, but scale in a more capital efficient manner. They want to see profitability. So they want to see a lot more execution capabilities and all of that, right? So I think from that perspective, there's no dearth of capital, and I think that capital is going to continue to come back, and you're going to start seeing a lot more deal activity sort of also happening.
All right, that will be all, Vinod. Thank you so much for explaining everything for our viewers ahead of the budget, what to expect and what is needed to make sure that the startup ecosystem, venture capital, it's boosting. Thank you so much once again.
Thank you. It's a pleasure.